Good afternoon, and welcome to the third webinar in Nebraska Farm Bureau's Inside Profitability series, a new series of webinars and podcasts focused on farm and ranch profitability. I'm Audrey Shipwright, Director of Generational Engagement at Nebraska Farm Bureau, and I'll host today's event on programs for new and beginning farmers and ranchers. The Inside Profitability series is a series of events focusing on topics essential to producer profitability. The topics will be identified by our members as ones key to managing and maintaining economically viable farms and ranches. We certainly hope you have enjoyed this series and aim to provide you with information and materials of value to managing your farm or ranch. So today's webinar will provide insight on beginning programs for farmers and ranchers from the Nebraska Department of Agriculture NextGen Program and the USDA Farm Service Agency. Many of our Nebraska's most productive agriculture operations will transition to new owners or operators over the next 20 years. Entering production agriculture can be an uphill climb. Access to land, the high cost of land and equipment, and understanding what it takes to run a profitable business makes it extremely complex. Both the Nebraska Department of Agriculture and the USDA Farm Service Agency provide opportunities for young producers to overcome some of those challenges and add another tool in their profitability toolbox as they navigate this capital-intense industry. We've gathered a panel of 3 individuals with experience with these programs to share their insights. Carla Baum manages the Nebraska Department of Agriculture's NextGen program and works with young producers who utilize the program. For the past 17 years, Kim Buheit has been serving Nebraska FSA as a farm loan officer, then a farm loan manager, and since 2018 as a farm loan specialist in Northwest Nebraska. And finally, we have a young producer with us who has experience with both of these programs, Dusty Romshek from Butler County. After the presentation, we will open it up to questions. Please, if you have a question at any time, you can use the chat or Q&A function in Zoom to ask it. So now we will move into the presentations. And first I will ask Carla Baum to present on the NextGen programs. Hi, Carla.
Well, I want to thank Farm Bureau for having me on and giving me an opportunity to talk about NextGen. It is a program that's been in place since 1999. The first year was 2000. And has been administered from the Department of Agriculture. And I have been the program administrator on this program since 2013. And so I'm excited here to be able to educate you about NextGen. And I hope many of you have already heard about it. Possibly some of you have already participated in it, but I again appreciate this opportunity. So the legislature created the Beginning Farmer Tax Credit Act that passed in 1999. And it was created out of a concern of our aging farmers and ranchers and who would be the next generation of farmers and ranchers to take their place. Recognizing that it was such a competitive market and a capital intensive market to be able to get into farming and ranching, and just the being able to compete for access to agricultural assets was a big concern for beginning farmers. So what this did was create a tool for beginning farmers to use. And that tool is a Nebraska income tax credit for the owner who will lease to an eligible beginning farmer. And so it is really incentivizes an owner to take a risk on a beginning farmer. So here, this slide here kind of talks about the benefits between the beginning farmer and the asset owner. So what we have is the program requires a minimum of a 3-year lease. And so if an owner will lease to an eligible beginning farmer for 3 years, that owner can receive tax credits, refundable tax credits against the Nebraska income tax. And I'm going to get into the details of those here in a little bit, but other things that the beginning farmer gets, of course, they get a 3-year lease, which is a benefit where most leases are a year-to-year lease. couple of other benefits that were added to the program later on was a $500 tax credit reimbursement for completing a finance management course. So that's a requirement for eligibility into the program. And so if you take a course within a year of applying to the program, you can be reimbursed for the cost of that course up to $500. And then another benefit that was added in 2008 was a personal property tax exemption. And I'll talk about that in a little more in detail. But really what this program helps really do is build relationships and make personal connections. We understand that it's really difficult, again, for those beginning farmers to gain access to ag assets. And so this program, we believe, has really helped with that, that challenge. Here we have eligibility requirements for the beginning farmer. They must be a Nebraska resident. They must have farmed or ranched less than 10 out of the last 15 years. They have to have a net worth below 200,000. And when we define net worth, that would be the beginning farmer, a spouse, any dependent children, all personal and farming assets minus all personal and farming liabilities. They also need to provide the majority of the day-to-day labor and management. We want it to be their intent to farm full-time. We understand that many beginners need off-farm incomes, off-farm jobs. And so that's totally acceptable. And it may take you years to get to that full-time status. But we really want that to be the intent. They need to have some experience or education in farming or ranching, and growing up on a farm or ranch really is that experience. I don't know too many farm kids that weren't part of that operation, certainly in the labor part of it. And then, as I mentioned before, they need to have an approved finance management course. And that course covers balance sheets, cash flow analysis, enterprise analysis, those types of topics. And this would be a college type course. And we do have a list of approved courses that are out on our website. So we can talk about that if you get to that point. The only really eligibility requirements for the asset owner is that they own a Nebraska agricultural asset and that they are willing to enter into a minimum of a 3-year lease. So we do have some out-of-state asset owners, but in order for them to reap the benefit of the Nebraska income tax credit, they have to file income taxes. So I'm going to talk a little bit about the personal property tax exemption that was added back in 2008. And this is whether you're applying for just a personal property tax exemption or the tax credit, it's the same application process, and you can do one without the other. So if you wanted to apply just for this personal property tax exemption, you certainly could. So the personal property tax exemption is afforded by the county assessor, and it's on equipment and machinery owned by the beginning farmer. So that would be equipment and machinery used in production agriculture. And you can be exempt from paying those personal property taxes up to $100,000 valuation in equipment and machinery. Each county assessor levy is a little different, but what we understand is that equates to anywhere between $1,400 and $1,600 if you're using the whole $100,000 valuation. So you can get that exemption for 3 consecutive years, and you can begin that exemption anytime within a 3-year period from when you're approved into the program. So let's say that you apply and are approved, and you only have $20,000 worth of equipment, but in year 2 you're going to make a bigger purchase, and then by year 3 maybe you're are over that $100,000 valuation, you might wait until year 3 to put that in place so you can get the biggest bang for your buck, basically. And then you can get that exemption for 3 years, but you need to start it within that 3-year period. What it requires is that you, once approved, that you take a certificate of eligibility, which is what we issue you. And then there's also a form, I think 1027, that the county assessor requires. You take those into the county's assessor's office by December 31st, then you can begin the exemption the following year. So we've had quite a few people take advantage of it. So again, $1,400 to $1,600 valuation in that on $100,000 valuation of the equipment and machinery. Then what the majority of folks apply to the program for is the refundable tax credits for the owner. And I talked about assets earlier. Approved assets for the program are farm equipment and machinery, cropland, pasture land, livestock facilities, breeding animals. About the only thing that really fits in the program as the law is written is breeding cows, because the asset has to be able to be leased for 3 years. So we do have a handful of leases in our program that are where the beginning farmers are leasing the breeding cows and then taking a share of that calf crop to grow their own herd. So those are what the approved assets are. So if you have can get a 3-year lease for any of those assets, then the asset owner can receive the tax credits based on the type of rent that you guys have entered into. So here's an example of tax credits on a cash rent lease. On a cash rent, the tax credit is 10% of the annual cash rent each year of the 3-year lease. So here's just an example. You've got 200 acres, $300 an acre is $60,000 a year that you're paying rent to this asset owner. So that equates to a $6,000 tax credit each year of the 3-year lease. Here on a share crop arrangement, the tax credit is 15% of the owner's share of the crop. So in this example, you've got 200 acres. We've just estimated 200 bushels per acre for corn at $4.50 a bushel, giving a value at $180,000 to that crop. And then the owner, in this example, is a 50-50 share agreement. So the 180,000 times the 50% is 13.5. So more lucrative in a share crop arrangement. That's because the owner is taking a risk in the growing of the crop. And so we have probably maybe about a 60-40% difference in cash rent versus share crop. Probably 60% of our leases in the program are cash and 40% share. We do have a few flex rents in the program also. So that is also acceptable. The tax credit does come off of their tax liability and is refundable. So once you factor in the tax credit, if they show that they're have overpaid their taxes, then they can request that in a refund. So oftentimes what we'll see when an asset owner enters into a 3-year lease with a beginning farmer is, knowing that they're going to be getting the tax credit, they may give that beginner a break on the cash rent. Not always the case, but in some cases. Oftentimes they may just use that bonus basically for incentivizing them to take a risk on a beginning farmer. But we have seen where that getting into the program certainly has gotten a beginning farmer's foot in the door. And so the NextGen program has benefited the beginning farmer in that manner. This program also is acceptable between family members. There are a few extra hoops to jump. Initially, when the program was created, it didn't allow agreements between family members, but it does now. And if you're related in any of these relationships here, does require that the parties attend a succession workshop or a succession consultation, and we can direct you to those, and those are free of charge. And then there actually be a succession plan in place. And a succession plan is a written document setting forth a process and timetable for reasonable probability of successful transfer of an asset to that beginning farmer. And so that is an extra hoop to jump if you are applying with a family member in any of these relationships. The application process deadline is November 1st, which was yesterday's, for anybody requesting a tax credit for the first year of the lease. So November 1st, 2021, it was a deadline for applying for a tax credit for the 2021 year. So anything that's postmarked by then will get consideration, and we will present that to the board of directors. Both an asset owner and the beginning farmer do need to submit an application. The majority of the paperwork really falls on the beginning farmer. They need to submit a fairly detailed 4-page application. They also need to submit a balance sheet showing their net worth meets the requirement. They also need to provide a projected cash flow analysis for the first year of the lease, for their entire operation, not just the asset that they're entering into the program, but for the entire operation. They also need to provide a soil conservation and nutrient management plan, a copy of the lease. The asset owner really has just a simple 2-page application that really just gives us their details as far as name, address. They do need to provide a social security number because that's how the tax credits are issued. And then a copy of the lease. And if it is a share crop arrangement, we have an additional document, which is a cash equivalent statement to put a value to the owner's share of the crop. And then, of course, if it is between family members, we need certification that they've attended a workshop or consultation. And then we also need a certification form acknowledging that they do have a succession plan in place. We present the applications to the board of directors. The applications come in here to our office, and then we go over them with a fine-tooth comb, and we troubleshoot any issues that we might have. So we have the best chance of it passing the board of directors when we get to a board meeting. Our board of directors is appointed by the governor, and we have 7 members, and those members include Nebraska Department of Agriculture, the director or their designee. I'm the current designee. The tax commissioner for the Department of Revenue or their designee. We have a designee right now on the board. We have an academia representative. Right now that academia representative is with the University of Nebraska, and they're an ag economist. We also have an agriculture banker on the board. And then we have 3 congressional district representatives. So 1 from each of the congressional district representatives. I feel like I maybe missed somebody. So anyway, So then those are presented to the board for approval. Right now we have a December 6th meeting, and then a December 2nd meeting, and then a January 6th meeting for approval for applications that have come in here this year. And we just approved probably close to 30 applications here this August here. So and you'll have Dusty Romshek's coming up here later in this webinar, and he has applied a couple of different times. And so hopefully he can speak to that application process. One thing that I do want to let you know is that many of our beginning farmers have used the program more than once. You can put on multiple assets, multiple asset owners, as long as you continue to meet the eligibility requirements. So at some point, we hope that your net worth has increased, that you no longer meet that net worth requirement, and that you've farmed greater than those 10 out of the last 15 years. But we do have quite a few beginning farmers that have used the program more than once. The key here is that an asset can only be in the program 1 3-year period. So we want that relationship between the beginning farmer and the asset owner to continue after those 3 years. So we want, hopefully that beginning farmer can continue to farm that same asset going forward. We did a survey back in 2015, and we actually phone surveyed 86 of our beginning farmers that had participated in the program. And I thought this was just some good numbers to have. At that point, we had issued $12.5 million worth of tax credits. Actually, it comes to about, here I think over the last 5 years, we've averaged about 1.2, 1.3 million dollars of tax credits issued each year. At the time of this survey, we were a little over 450 beginning farmers that we've helped. We're closer to about 550 now. We started taking, keeping track of the number of acres in the program in 2011. From 2011 to 2017, we had a little over 79,000 acres enrolled in the program. And 18% of our cases have been between related parties. And down here, what we thought really was good, really good feedback for us was that 99% of those 86 beginning farmers that we had surveyed were still farming. So we thought that that was really significant. 85% of them were still farming the ground that they had enrolled in the program. Again, another significant stat, we believe. 91% of them said the program was helpful. Many of those said if it wasn't for the program, I wouldn't have gotten my foot in the door. We did have a few that said, you know, after the 3 years, the asset owner wanted to raise the rent and I just couldn't make it work. So I had to let go of that property, but it still gave me an opportunity to farm for 3 years, and I'm still farming. So although I'm not farming that asset, I'm still farming, and they found a benefit to that. 100% said they would recommend the program. So we thought that was some good feedback. So we really truly believe that it's a win-win situation for the beginning farmer and for the asset owner, and truly believe that it's about relationships, building those relationships for long term. Hopefully, you know, in a best case scenario, maybe that beginning farmer can be the successor of that farm ground at some point, even if they're unrelated. So we truly believe there's value in the program. And I would just say, I know you're going to hear from FSA. Kim's going to speak about the beginning farmer loans. I would say just maximize your resources. There are really a lot of good resources out there. For the lending, we certainly say check with your local lender, check with your county farm service agency. Nebraska Investment Finance Authority also has some beginning farmer loans. Farm Credit Services does. Our program certainly is, we believe, is instrumental in helping beginning farmers gain access to farm assets. And then there is just a wealth of information out on the University of Nebraska's Extension website. And so I would say, just maximize your resources and really build those relationships, because we need that next generation of farmers to continue this great legacy in Nebraska. So I want to thank again Nebraska Farm Bureau for this opportunity, and look forward to having some discussion at the end.
Awesome. Thank you so much, Carla. This has been fantastic. And I know the November deadline might have sunk a few hearts, but that just gives you a whole year to plan. So that is excellent. Thank you, Carla. Okay, next we will hear from Kim from the FSA. So I will have Carla turn her video off, and Kim, if you want to come on, and we'll have you share your slides.
Okay, thank you, Audrey. Well, welcome everybody, and I'm glad to be here today. Special thank you to Nebraska Farm Bureau as well from the FSA. And we are the United States Farm Service Agency, USDA. As you may know, the Farm Service Agency is a branch of the United States Department of Agriculture, and FSA serves farmers and ranchers and rural landowners through a variety of federal programs. Those federal programs include economic safety nets, disaster assistance programs, conservation programs, and farm loan programs. Those programs are authorized through the federal Farm Bill legislation, and those farm bills usually happen about every 4 to 5 years. We have a variety of programs that are designed to assist beginning farmers and ranchers, and I want to share some of those with you today. And we're going to have a focus on some of the loan programs as well as some of those safety net programs that I mentioned as well. So what should be on your screen is a map of Nebraska, and we've got all of our counties color coded here. And so you're going to see that some counties are blue, some are green, and then some are white. And how those are color coded is based on the available staff in those counties. So for instance, the blue counties are going to have your full-time farm program staff and the farm loan program staff. The green counties are going to have your full-time farm program staff. And then we want to make sure you understand, though, that just because your county might not be green or blue, if you're in a white county, that doesn't mean you don't have services available from the Farm Service Agency. That just means that you're going to have to go through one of your outlying offices to get some of those services. So we do cover the whole state of Nebraska, and there is a link down there at the bottom that's going to show you where to find your local service center. Now, of course, I'm very particular to Nebraska since this is where I've been serving for 17 years now, but the Farm Service Agency is located throughout the United States. Specifically in Nebraska, we have over 71 county offices, and we've got over 420 staff that are available to assist you with any of the programs that you might be interested in. With this program, we wanted to focus on beginning farmers and ranchers and really let you know what types of programs are available to assist beginners if you're just trying to get into farming and ranching. So to be considered a beginner for Farm Service Agency purposes, it has nothing to do with age, just has to do with the number of years that you have been farming and ranching. So if you have been operating for 10 years or less, you may fall into that beginner category. We can make loans to individual applicants that might be beginners as well as entity applicants. One of the keys with entity applicants is that all of the members do need to be related by blood or marriage, and all members would need to be beginners as well. Okay, so a couple slides back, we had the map of Nebraska, had the blue and the green. The reason it has the two different colors is because of the staff that's within those counties. So Within the FSA program portfolio, we have farm programs and we also have the farm loan programs. The farm programs are going to be your safety net programs, your disaster programs, your conservation reserve programs. And then the farm loan portfolio has the loan programs. So that's going to be your direct loans, your guaranteed loans. We've got microloans, beginning farmer loans, youth loans, lots of different types of loan programs that you can learn about and maybe take advantage of. These programs are built to serve all farmers and ranchers. And within some of these programs, we've got specific provisions to assist beginners. And so I'm going to talk mainly about our farm loan programs in the next few slides. And then towards the end, we'll talk a little bit about some of the other farm programs. At FSA, we actually often refer to ourselves as the lender of first opportunity. So that is one thing that I'm pretty passionate about with our loan programs is being a lender of first opportunity. We're oftentimes the place where many beginning and farmers and ranchers start. The reason we can start with you is because we've got maybe some reduced loan criteria that commercial lenders don't offer. So in a lot of our programs, we don't require down payments. We often have a lower interest rate and more favorable terms that makes it a little bit easier to get credit from FSA where you may not be able to get credit at the bank. And in Nebraska, that is one of our main focuses is our beginning farmer loan program. So last fiscal year, we actually had a great year in regards to lending to beginning farmers and ranchers. 69% of our loans went to beginning farmers and ranchers last year. And then in regards to the nation, Nebraska actually does a really good job as well, and typically is one of the leaders in the nation in lending to beginning farmers and ranchers. And so it's just a great program, and there's lots of great resources that can assist you in starting up your operation. We don't just make the loan either. I mentioned that we're the lender of first opportunity. So one of the goals is to make sure that you start off on the right foot and then eventually get yourself in a position where you can graduate to commercial credit. So we might help you build equity, help you learn how to keep records better, ask some of the tough questions in regards to your operation, what's going right, what's going wrong, what ways can you fix it. And the eventual goal is for you to be able to go to a commercial creditor and be able to get that financing. So we're going to help you evaluate your operation and talk to you about it to make sure that the financial decisions you're making are in the best interest of your operation, and really talk to you about some of those goals that you might have for the operation too. So on this slide here, we've got a couple different types of loan programs. The direct operating and farm ownership. So anytime I say direct, that means that the funding is going to come directly through your farm service agency office. When I say guaranteed, that means you're going to be continuing to work with your local lender, and the bank would be the one that actually funds those loans. But for one reason or another, your local lending institution may want to apply for a guarantee on your loan. And what that means is it protects the bank for up to a certain percentage of a loss should that incur on those loans. So it's often the next step after a direct loan. One of the benefits for beginners with these programs is that we do set aside a certain pool of funds that is targeted for our beginners. And that doesn't mean that our programs are only open to beginners. We are essentially open to all farmers and ranchers, but we do set that pool of funds aside for beginners. Okay, on this slide here, we have 3 different types of loan programs that are probably the most utilized by our beginners. That first one there is a direct operating loan. That operating loan can be anywhere from 1 to 7 years, depending on the use of funds. Typically, our annual operating loans are going to be for things like your seed, feed, fertilizer, any of your annual input costs. The loans that we look at loaning up to 7 years on are going to be some of your term operating loans, such as cows, machinery and equipment, that type of purpose. The loan limit is $400,000, and the November interest rate is 1.75%. Yes, 1.75%. So that is an awesome benefit to be able to start out with, is a really low interest rate, a little bit longer term. Obviously makes the cash flow a little bit easier, and hopefully you can build equity quickly in order to get you to that commercial lending institution. The second one there is our direct farm ownership loan. That one is for the purchase of real estate or real estate type costs. The maximum loan amount is $600,000 on that one, and we can go up to 40 years, November rate 2.875. This next one here is that guaranteed loan program that I mentioned, where commercial lenders actually extend credit to you, but then the commercial lender applies to FSA for a guarantee. And so we have a list of lenders that would be available locally that participate in that guaranteed loan program. You still pay the bank's rates and terms. There is a higher maximum loan amount, though, of the $1,825,000, and that's because the funding actually comes from the lending institution. We also have the down payment loan program. So as I'm sure you are realizing, it is very difficult to come up with the 20 or 30% down for real estate purchases that a normal lending institution might have. Well, if you can come up with 5% down and you're a beginning farmer or rancher or socially disadvantaged farmer or rancher, we've got this loan program that is called the down payment program, where if you can come up with 5%, FSA can loan up to 45% of the purchase price, appraised value, or the maximum amount is $300,150. So 5% from you, 45% from FSA at 20 years, 1.5% means that we need 50% more financing, and that's usually going to be with a bank or a private lender, and it could even be the seller. So there's programs available that don't have a down payment requirement, but obviously if you can put a little bit of cash down and get into this program, 1.5% for 20 years on almost half is a pretty good deal too. This next one is our joint financing program. That one does not have a down payment required. We can finance up to 50% of the purchase price. The loan limit is $600,000, term is 40 years, and this one has the interest rate of 2.5%. So a lot of times your loan approval official will probably work with you to figure out which program is the best one to get into based on what you've got available for assets. All right, this slide here has some other loan programs that are available. Microloans, just like the name indicates, going to be your smaller loan amount, maximum loan amount of $50,000. And we do have operating purposes, we have real estate purposes for that program as well. Farm storage facility loan program, that's going to be low interest financing for producers to store, to finance storage, handling, transport eligible commodities they produced. You can borrow up to $500,000 on that program, and the minimum down payment is 15%. A microloan option is available for that program as well. Actually, I'm going to go back a slide there. Talk about the youth loans there at the bottom. Our youth loans are something that I like to push as well. And the reason is because I have seen a lot of beginning farmers and ranchers come from our youth loan program. And so oftentimes youth will get started with a youth loan. They can borrow up to $5,000, and it's for anyone between the ages of 10 and 20 years old. They do have to participate in something like FFA or 4-H and have an income producing project. I've seen a lot of success stories with kids that have started with youth loans. Maybe they bought their first set of cows at 12 years old, and then by the time they got to head off to college, they had 20 cows paid for, and those cows helped to put the kids through college. And so if you know any youth that would be between those ages, have them talk to their local farm service agency too about getting started with youth loans. As with any program, we do have some eligibility requirements. Some of the basic requirements for everyone are a U.S. citizen, a U.S. non-citizen national or qualified alien, ability to obtain credit elsewhere. What that means is that we can't compete with local lending institutions. So if we did, we'd have most of the business because our interest rates are so much lower. So if you're able to get financing at a bank, that is what you need to do. We can't compete with a local lender. You need to have good credit history, have the capacity to secure the loan, and you also have to participate in the operation. We also look for experience. So we want to make sure we don't get the cart in front of the horse. And before we make a loan, we're going to talk to you about your level of experience based on what type of loan program you'd want to apply for. So with our operating loans, you do have to have at least 1 year of experience. And then for our real estate loans, you've got to have participated in the business operations of a farm or ranch for at least 3 out of the last 10 years. So there's going to be different criteria based on your situation that could or could not qualify you for this program. So a good rule of thumb is to visit with your local farm service agency about what you have for education and experience, years of operation, and they can help you figure out which loan program you might fit into. Okay, so we've talked about trying to find your local service center. We've looked at what types of loan programs might be available. And so if you're thinking the farm service agency might be a pretty good place to start, we do want you to do a little bit of homework first and then set up an appointment with your local service center. If your goal is to get into farming and ranching, it's important that you think through that business plan. And some of these questions on this slide here would help you in thinking through and making that farm operating plan. It helps you think about what you're going to produce, what your goals might be, where are you going to market, what kind of price might you receive, what kind of associated expenses are you going to have, what kind of equipment might you need for your operation. So these are all good questions to think about prior to starting that first meeting with your farm service agency office. Another important factor would be to be prepared for that visit. So for any of you that maybe have gone through the application process with the farm service agency, you know we're going to ask questions about financial records. We ask for an application. We ask for lots of verifications of things. And that's all just to make sure that you've got good solid numbers for your business plan. We also suggest that you draft that business plan ahead of time, because ultimately your goal is to go in and ask for money, and you want to show that you can repay that money. So along with that discussion is going to come some questions that will be discussed between both you and your loan approval official. Be prepared to talk about your experience within agriculture, and try to look at your farm service agency as your partner in making this business operation work. So I threw a lot of different loan programs at you. And if you're not sure which one you want to pursue, we do have a great resource on farmers.gov, and it's a farm loan discovery tool that actually allows you to answer some questions based on what it is you want to do, and it can help you find not only the loan program that you might fit into best, but also your nearest service center. Now, going back to a couple slides in, this slide was there, and you might remember we had the farm loan side highlighted before. So now we're going to talk a little bit about the farm program side. Within the farm program side, we have different types of programs, and these programs, for the most part, are available once you get your farming operation started. This slide here has some acronyms that some of you may be familiar with, and those are explained here. Okay, so the safety net programs are going to be like your ARC PLC and your DMC, and then some of the disaster programs are listed there below. And these programs are available generally to any producer. You can see, though, that we've got some of them highlighted, and those are ones that have specific beginning farmer provisions. So, for example, the Dairy Margin Coverage Program is a safety net program, and it helps dairy operations with risk management, and it's like an insurance type of coverage. The important thing to know about this one is if you're a beginner and you're going to go into dairy production, you really need to visit with the local office about this program. One of the provisions that is available to beginning farmers and ranchers is that the administrative fee for basic coverage is actually waived for that program. Two other programs fall under this disaster coverage here, and we hope you never need them, but they are available and they do have some beginning farmer provisions. For the NAP program, that one is our non-insured crop disaster assistance program. And this one's kind of like crop insurance, but it's for crops which there is no commercially available insurance. So specialty crops such as fruits and vegetables, grazing land, and in some areas alfalfa, those might be some commodities that you could get coverage for. Beginning farmers raising these covered crops can get some basic coverage for free, and then some buy-up options, and premiums can often be cut in half for those. You do have to enroll in this program ahead of the production season, so it's important that you visit with your local office prior to that. The other program highlighted on here is ECP, the Emergency Conservation Program, which is a cost share program, and that's designed to help producers repair land and fencing damaged through natural disasters. And some of the provisions for beginners is that the cost share can be at a higher level. And the takeaway here is we hope you don't need those, but if you do, then there's some great options available for assistance. The next one is the Conservation Reserve Program, commonly known as CRP. A lot of people have heard about the CRP program. It's a voluntary program that rewards the landowners who take environmentally sensitive land out of production and put it in a contract. And those contracts can run anywhere from 10 to 15 years. Through the CRP Transition Program, or TIP as it's called, this program can allow individuals who have CRP contracts that are nearing the end of their term to transition those acres to a beginner. And in exchange for that, they might receive up to 2 additional years of rental payments from FSA. It's a really good opportunity for a beginning farmer or rancher to partner with an existing farmer or rancher and get a financial benefit from it as well. So we're often asked whether or not we have a list of expiring CRP contracts in different counties, and that isn't something that we have available. So we do recommend that you try to figure out who might have those CRP contracts in your area and try to build relationships with them as an opportunity to get into this program. One of the best things you can do is get in touch with your local Farm Service Agency office. So you'll see my contact information here on the slide, but your local staff are going to be the ones that can answer some of your specific questions, and they're the ones that process the applications for assistance as well. And so definitely go to find your local service center or your local office and decide which one you would need to go to. We also have some great resources online through farmers.gov, fsa.usda.gov. All of our programs are listed there. I like to tell people to search around on those websites, and that is kind of a starting place to see what's all available. And then you can form your questions, and when you set up that appointment with your local office, you've got your list of questions that you want to talk about, and you can tell your story and see what might work for you. So that's the end of my program. And at this time, I mean, we can take questions whenever, but I would turn it back over to Audrey. And thanks a lot again for the opportunity.
Awesome. Thank you, Kim. I know when you put that farmers.gov slide up, I wrote it down quick because that's talking to people is a little bit scary sometimes. So if you can go on there and navigate first and figure out what you're dealing with, that's kind of helpful. So thank you so much. That's awesome. All right. Next, we will hear from Dusty. So Dusty is a young farmer who has used both of these programs from the Farm Service Agency and the NextGen programs. So he's just going to talk a little bit more about his experiences, and then we will open it up for questions. So again, if you have any for any of our panelists, please be sure to put those in our chat box or our Q&A box and all those places down on Zoom. So with that, go ahead, Dusty.
Well, thank you, Audrey, and thank you for having me. It's definitely the first time I've ever done anything like this, so bear with me. And I caught a little grief for not having a slideshow or a PowerPoint, but in my defense, I'm still trying to finish up harvest, and I'm just happy I'm not doing this from the combine cab right now. You know, the things that Kim and Carla talked about really rang with me today, because I pretty much went through all those hoops here in the last 3, 4, 5 years. A little bit about myself. I guess I would consider myself to be a non-traditional beginning farmer. I'm still considered a beginning farmer, but I'm 36 years old. So definitely what what Kim said, it doesn't matter your age, it just kind of matters how many years you've been farming. So again, a little bit about me. I'm a row crop farmer from Butler County. I started farming for myself, kind of operating, I guess, having skin in the game, I would say, as far as borrowing money to row crop farm was in 2018. And just as Kim presented there, I went into my local FSA office and just said, hey, here's what I've got going on. How do I do this? Now, obviously, I should preface by saying that I've had a job in town. I've always worked full-time in town. It was actually just last growing season in 2020 that I was blessed enough to be able to quit my day job in town and farm full-time. And if any of you are truly beginning farmers on this call, I think that that might resonate with you as being a pretty kind of a dream come true kind of day. So a little bit about the NextGen program. When I talk about myself, you know, I started farming for myself in 2018. I didn't pick up any rented ground until 2019, and that was a very small amount. And then in 2020, that was my first year working with Carla and Jolene, I might add, with the NextGen program. And my experience with them has been nothing but positive. I remember when I first called in to inquire about it, I was really nervous, and I asked Carla, I said, you know, what do I need to do to make sure that, you know, if you're getting 400 applicants in every year, that I'm one of the 20 that you pick, or something like that, you know, trying to find my edge. And I vividly remember her telling me that, you know, don't worry about that as long as you meet the qualifications. The board isn't looking for a reason not to approve you. You just have to meet the qualifications. And believe it or not, the process was a lot simpler than I thought it was. She said that the application process is pretty lengthy, but it really wasn't that bad at all. You probably know all that information about yourself off the top of your head to be able to fill out that application. You know, when it comes to the NextGen program and trying to acquire ground, we all know that that's a really big struggle, and especially in the part of the country that I farm in, it's a really, really big struggle. Cash rent values are pretty high. It's mostly irrigated ground, pretty productive ground. And seems just like, you know, if you're interested in a farm, there's going to be 100 other guys interested in the same farm too. The thing that I would that I would kind of say about the NextGen program is it is a tool to be able to, what I found it to be useful for was a tool to open up conversation with a landlord. It's just kind of like meeting somebody for the first time. You want to find something to talk about. You know, you may not even know this person, but it at least gives you something to talk to them about to get your foot in the door. And then all of a sudden they know you're interested. At least they know you're interested. Because in my experience with trying to get ground, just letting people know that, hey, I'm out here, I'm trying to farm, I'm trying to grow my operation, trying to gain acres, you know, want to farm full time someday. It takes a few years just to get your name out there. So that's one good thing about it. Now, I will say that when it comes to renting ground, if it's as competitive where you are as it is where I am, you know, the NextGen program may not, it probably won't be the ultimate reason why you do get a farm. In my experience, a lot of times, you know, people have to know you. They're probably not gonna just rent it to you just because they're gonna get a 10% tax credit on the cash rent. Now, again, that's my experience. That may not, you know, maybe those situations are out there, and Carla could probably answer that for me. But one of the things, and I saw a question in the webinar, somebody posted a question, is how do you get this, something along the lines of how do you get this to the landlord? And it's basically, in my experience, every landlord that I've ever taken this stuff to, they've never heard of the program, or they've heard of it, but they really don't understand what it is. And so when I put a bid together to farm their ground, you know, I put it on paper and I show them that this is how the tax credit works, and explain the process to them and take it to them. And, you know, it's a really eye-opening experience. And whether you get the farm for the landlord, because like I said, most of them don't know about it. And whether you get the farm or not, they'll remember you after that. So you never know what's going to happen in 3 years. You know, they may circle back to you. And if you still meet the requirements, and you never know, you could pick up that farm. Let me take a look at my notes here. One thing I would say with the NextGen program is, you know, before you start taking it to potential landlords and kind of advertising it in a way, you know, to get ground or putting it in with your bid for ground, I would just say, you know, you really want to make sure you have your ducks in a row, and that you know you can qualify for the program. That means getting to the bank and getting your cash flow analysis and your all your banking work done basically for this coming growing season. You know, if you're talking about picking up a farm this spring and knowing what you can put in for a bid on it, but you should be doing that before you probably put a bid on any farm anyways. But that's just something that you want to make sure you qualify, because it wouldn't probably be a real good situation if you know, you kind of promised it to them and then you didn't qualify. And the other thing to keep in mind, and I think Carla mentioned it, but you know, you can only do this once with a particular tract of ground. So explaining that to a landlord, I think you need to be educated about the program before you start talking to landlords, because you don't want them to assume something that isn't true. And I've, in my 2 years of making applications for this program, I've done a lot of educating to landlords about the program, because I've been surprised just how much, you know, they'll kind of assume. And I want to bring this one up in particular about that, you know, each farm can only be in the program for that 1 3-year loan period. So if you are trying to get a farm and you get a 3-year lease and you get accepted into the NextGen program and the landowner gets the tax credit, you can't reapply with that. You can't apply 3 years later after your lease expires when you are renegotiating a new lease. So keep that in mind. And the other note I had on it was Just keep in mind too that so the application deadline is November 1st. I've always kind of, in the wintertime and in the early spring is when you're negotiating and trying to pick up ground and things like that. So you actually have, so if you would pick up a farm this coming year, so in the year the crop season 2022, you have until November 1st of 2022 to get your application in for that new farm, in case that was confusing anybody, because I was really nervous the first year I did it, just based on timelines and things. A couple notes on the FSA things. I went through everything that Kim talked about my first year farming. I just went into my local FSA and laid it out and said, what can we do? And I for the first, 3 years, I lended through them for my operating loan. Since then, I've graduated into I get my operating loan at a bank, an ag lender, and they're guaranteed through the FSA, which I will say, and I'm not that knowledgeable about it, but you may want to check if you're looking into something like that. There is a cost associated with that to have those loans guaranteed through the FSA. So keep that in mind. And I'm going to try to keep it short here. But a couple things I'd say is, I think everybody's story in beginning farming is a lot different. Like I said, mine is probably a little different than many of yours. But the biggest thing that I've learned is, you have to be realistic about your goals. It takes a lifetime to build a farming operation. And so I just, it's not like going to college and you're going to get that degree in 4 years because you're going to work really hard for it. Well, you may have to work really hard in farming for 15 years in order to, I guess, quote unquote, get that degree, which in my terms is getting to a spot where, where you're comfortable and kind of seeing those goals come true. But set small goals, make them realistic, and also having a understanding spouse is a very big plus. I know it was it was interesting in my house when I finally took the plunge to quit my day job and farm full time, and being at a job that I'd been at for a while and making good money. It makes for a lifestyle adjustment, but it's worth it if you're doing what you love and you surround yourself with the right people. So that's kind of my overall talk. I don't know if it was helpful or not, but that's what I have.
That was so helpful, Dusty. Thank you. My video wasn't on, but I was smiling and nodding when you talked about a helpful spouse, because I'm sure all of the farm wives out there can totally relate.
Yes.
I love it. Cool. Well, thank you. Okay, so now we're going to have Kim and Carla come back on. We did have a couple more questions, in the Q&A. One of the first ones, I guess I'll toss to Carla, from my friend Adam in Hall County, was asking about when you had the cash rent agreement kind of breakdowns on there. He asked, is a bushel rent agreement eligible for this program? Do you have any insight on that?
Sure. Yeah, bushel rents are acceptable. We treat them as a cash rent because it's guaranteed. So the tax credit is calculated on 10% of the value of the bushel rent. But yes, totally acceptable.
Cool. And then Dusty kind of talked about this, but Carla, do you have any more insight too about like how you approach landowners with this program? You just walk up and say, hey, here's your tax credit, or?
Sure. I think it is about relationships, and you do need to kind of get your foot in the door. And I think often we actually have tried to really work hard to educate landowners And we've had some landowners that have been approaching the beginning farmers about that. But I think Dusty's point about make sure you meet the eligibility requirements before you're pursuing a landowner and touting the program, because you want to make sure that you meet those eligibility requirements first. I will tell you that oftentimes we hear landowners say, I'm hesitant about entering into a 3-year lease, not knowing if my beginning farmer is going to be approved, if our application is going to be approved into the program. And we do see language in leases that will say the 3-year lease is dependent upon approval into NextGen. If not approved, it becomes a 1-year lease. So that protects the asset owner. So those are some things to consider. And certainly, we don't expect all the beginning farmers or the asset owners to know everything about the program, but that's our responsibility here at the Department of Agriculture. So certainly, if you have an asset owner that you can't answer all the questions, so direct them to us. We'll walk them through it. We'll answer questions.
Perfect.
I think at one point, Carla, on that note, I think I even did a conference call with you one year with the landowner.
Yep, we have a
just
lot
sat
of
in our
those.
kitchen, and I said, "Hey, we're gonna call Carla and just put it on speakerphone."
Sure.
And
Sure.
yeah,
Yep, that works. Yep, happy to do it.
Okay, I have a question for Kim real quick. And I think this could apply to you too, Carla, but I'm just curious to know what percent of applicants are approved. I know there's kind of a lot of applications probably for all the different commodities, but do you have any number or ballpark on that?
Well, that one would be a tough one to answer, and because it also depends on which program they'd be looking at too. So a lot of the farm programs require an application as well. With the farm loans, though, I can tell you that I would say the vast majority, for instance, Nebraska approves over 1,000 loans every year, and there's probably just a handful that are either denied or something like that. And so we don't. There's not a hard line necessarily with the applicant. There's going to be a lot of discussions. There's going to be a lot of questions asked before it gets to that point. And so I would say most of them, way more than most of them.
Perfect.
And I don't have a number either. If they don't meet any of the eligibility, if they have to meet all of our eligibility requirements. So if there's one that they don't meet, that's going to throw them out. And so typically those don't even go to the board of directors. The majority of ours all usually are approved at the first round when they go to the board of directors. However, if there's something that we missed in the office, and full disclosure, Jolene and I do not have farming backgrounds, but we've worked with the program long enough that we know some of the red flags and what the board is looking for. So if there's something that we missed and the board questions it at a board meeting, they'll typically table it, allow us to go back to the applicants, get some kind of explanation, and then represent it. And almost always that explanation has been satisfactory enough for the board to approve it at the next opportunity.
That's helpful to know, because I feel like if I was a young farmer applying, you like put all your eggs in your basket and you're like, oh my gosh, I hope this gets approved. And then to know that you guys are just friendly people on the other side and will work with you, that's a little bit of a relief. So
I will vouch for Carla and Jolene that. And what you said, it was exactly my case the first year. I was so nervous. I was just spitting nails. I felt like all my eggs were in that basket, and I had these signed leases, and I needed to get this approved, or I wasn't going to get the farm, and it was. But they were great to work with, and I felt like they went out of their way to help me make sure that my application was correct, and if there were any issues, it a lot of times it's not just issues with, it's not like you're trying to hide anything. It's just like farm tracts, legal descriptions on ground, and making sure all the I's are dotted and the T's are crossed. They were very helpful.
Sure. All right, Kim, we got one more for you in the chat. So they asked, to participate in the farm ownership loan program with the FSA, does the land have to be purchased through a private sale, or can it be purchased at auction?
That is a great question, and that comes up a lot with our programs. Unfortunately, auctions aren't something we can work with, but here's why. So part of our application process requires us to have a signed purchase agreement. And that signed purchase agreement is going to be very specific to a certain piece of real estate. And approval for a loan is going to be based on what you can produce on that particular piece of real estate. So we're not like a mortgage lender where we can say, yeah, you can spend up to X amount of dollars. You're pre-approved for that. That's not the purpose of the program. The purpose of our program is to make sure that whatever piece you want to buy, it makes sense to buy it at a certain dollar amount, and that we know that you can ensure yourself a profit on it. So because of that, we can't work with auctions. But what people do a lot of times is they might, specifically if we have a beginning farmer or rancher and a piece of ground is coming up for auction, there may be a family member that purchases it initially at auction. And then at that point, they can apply to FSA for that same piece of ground. Now, there's no guarantee that we would finance it after that, but that happens a lot when it comes to auctions. So it's not like they're totally shut out, but the important part is that you couldn't buy it at auction and then apply to an FSA office and have that refinanced, because we cannot use our real estate loan funds to refinance debt. But you could work around it by having someone else buy it, mom, dad, whatever, and then potentially apply to FSA, as long as you're not listed as an owner on that property at all.
Perfect. That's awesome. Okay, well, I think we're out of time for questions for today, but I just want to say thanks for everyone for participating and throwing those great questions at our panelists. And a special thanks to Carla, Kim, and Dusty for taking the time to be with us today. So following this webinar, we will send an email with a brief survey on today's program, as well as some additional resources on this topic. We hope you'll fill out the survey so we can make sure we provide great quality content for all of our viewers here in the future. If you enjoyed this webinar and are looking for more resources for young agriculturalists, I hope you will join us at our Young Farmers and Ranchers Conference. It will be held January 28th and 29th in Kearney. And this is a conference created by young producers for young producers, and you won't want to miss it. It'll be more of this stuff and a little bit more fun too. Not that this wasn't fun, but cornhole is fun too. Our next webinar will be held January 18th on the topic of labor shortages in agriculture. So stay tuned for more information on that. And thanks again for joining us today.